Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
Hey, greetings, and thank you so much for joining us to Macro to Micro Options Power Hour. I love that I do this every Wednesday with Hans Albrecht, our options mentor. And we are very happy to join you during excitement of Nvidia release. We actually always do this Wednesday after the close, so it just happens to coincide with Nvidia release. But we're watching for it. Anyway, good afternoon, everybody. Yes. So I am the founder of LaDucTrading.com. I'm actually coming to you from Boston area. Hans is over in Toronto. So we're definitely East Coast, West Coast. And we'd like to come in and talk a little bit about the market dynamics, what's moving the market, structural things, especially in the options world. Do a little bit of options education. We've got one topic I really want to kind of have Hans dive into again. He's mentioned this before on a Tesla earnings. We talked about it at some selling some in-the-money calls on Nvidia holdings for those who are already with the stock with this kind of event coming in. But the point is, we have got lots of stocks that we present and the option tactics with them for our members at LaDucTrading.com. We also have this fabulous, if you go to that website, LaDucTrading.com/Hans, an options education course that Hans delivers. So there's a lot of video program, but then there's also customization and mentorship. So have at it. It's fabulous. This is why I brought Hans in for my clients. I really am excited to work with him on these option strategies to help clients not only take advantage of directional moves, but also protect when we get volatility. And speaking of volatility, it's VIX expiration day. We did have a pop, and some of that was attributed to the settlement. Some of that was attributed to war vibes, not just waiting for Nvidia, but we're also waiting for Trump to pick a Treasury Secretary. And during all of this, which would normally be kind of uneventful, we definitely have escalation picking up in Russia, Ukraine. So we're going to talk about volatility as well. So Hans, give me your thoughts on this parabolic market that is Bitcoin and MSTR, Nvidia earnings, and anything else you want to hit.
We dipped below 14 on the VIX, didn't we, a few days ago, but it didn't last long. It was sort of we talked about how Nvidia would provide us with a little bit of tension, and that the VIX would probably pop into that. But of course, we didn't see things kind of escalating on the geopol side, which isn't so much anything going on over there as it is the administration sending missiles over there, and now them hearing about landmines and things like that. So, and then Ukraine got, well, I think missiles were already there, so they put them to work right away, and so that's gotten people a little bit nervous again.
Justifiably so.
Justifiably so, exactly. I mean, there's, people always have in some recesses of their mind somewhere is this idea of how much can this escalate. And there was some rhetoric out of Moscow today about how they have no interest in nuclear war, which is a nice thing to hear. But as long as they keep kind of pushing Putin, he's going to react as we should predict. He's no wallflower, so he's going to react to any pressure that he feels. And this is what we have. So this isn't going away. We're not getting exactly a massive pop out of oil. That's kind of interesting. Our little XLE idea is finally over 96.34, and we had a nice play on it in November, and it kind of expired, went out with a whimper.
That was the lamest call for both of us. It was just like we had so much more going on, and now finally it kind of like appears. But nat gas looks a lot better in my world. This is the energy trade isn't really exploring any excitement on geopolitical risk. In fact, when Trump got elected, the deregulation side of this really took the premium right out of gold and wheat and oil. So nat gas is still bid. That's still viable. Some refiners are coming back into play, but XLE is definitely a little slow.
Slow to react, isn't it? I mean, it's
Palo Alto, just by the way, announced earnings. I know that is a position of yours.
Yes.
Yeah. So I want to.
It's coming down a little bit. Yeah. So
I'm getting anxious. I'm getting nervous. I'm excited.
I know Palo Alto is the appetizer. So I'm long the stock. I've been long it for a little while, and I sold some December 390 calls for $21 to kind of give myself. I don't love to sell premium into earnings, but this is an instance where I have a nice gain on the sheets. and the premium looked pretty fat for me, and so I liked it. It's down. The stock's down a little bit. Now, what I did today is I picked up just a little insurance down around the 360 level, just in case the expected move is something around 30 bucks. So I thought sometimes what you get on these expected moves is it's amazing how efficient the option markets are. They will often go right to that expected move. If it's $20, it'll go right there and often overshoot. And so folks who know me and have done any of my programs know that I'm not a huge fan of selling puts into earnings. And we saw a great example of that this morning. We saw Target get smoked and go way far past any expected move. And so, unfortunately, there's not a lot of positive edge in selling those kinds of earnings plays. Now, there are other things you can do. You can do calendars, you can do butterflies. There are other ways to play earnings. But in terms of just straight up selling options, there's really not a lot of edge in that. Most people don't realize that, but I think a lot of people kind of trade options for excitement and not to make money. And so I kind of make fun of people.
But there really wasn't an edge going into Target. I mean, they are doing so poorly with Dollar Tree and Dollar General, unlike Walmart and Costco, which obviously lead that band. And my two trend long faves that have been long term are TJ Maxx and BJ's. So BJ's is like the little cousin of Costco. They were not affected by this wallop on Target. So there's that. It really does a lot of inventory control management and just good management. But this is a good point. Okay, selling puts would have been very painful in Targets. They would not have been painful in Snow. Snow's not one of mine, but it's definitely a client. We've been stalking this since 110. And I know Archna, for example, who's our advanced options trader, she posts all of her trades. And a few clients were very excited about Snow coming up off the bottom. And they were selling puts a few weeks ago at 110, and it's now hitting 148, which is a monthly price target. So they're going to be happy today.
Beautiful.
Not mine.
That's a beautiful move. The Snow really has struggled for a good portion of the year. So it's nice to see that thing come back for holders of the stock. Still has a bit of room if they're starting to turn things around. That I'd say, I'd have to take a look at the numbers and some of the details, but I wouldn't be looking, maybe a short-term fade, but that's an interesting move to me. It certainly looks very, very positive.
Yeah, the earnings were good. Revenues up 28% year over year. Product revenue, that was revenues. Sorry, it's moving by me too quickly. Net revenue, retention rate 127. Oh, their guidance is good. They beat bottom and top right up into monthly resistance at that 150. Speaking of 150, that's really the Nvidia area that I would not be surprised if we kind of move around dramatically after this release and then maybe even pin there, but we'll see.
Yeah.
Do you have any position long into Nvidia for this drama event of Q3?
I do. So we talked about it in the members meeting yesterday, where we love to give members ideas, what we're doing, ways to play things. And I have a downside. I have two plays. I have a little bit of a hedge. So I have a downside broken wing butterfly. So what that is where typically with a butterfly, you have kind of equidistant strikes from that middle strike, the sort of body of the butterfly. And if it's typically it might be buying the 130, selling two of the 120s and buying one of the 110s. You break the one side and you bring that further away strike a little closer in. So what that does is it gives you, I'm going to show it to you right now.
It's interesting that you say that because my live trading room, Mikey, he is mostly a futures trader, but he also does options on earnings. And his absolute favorite strategy is the broken wing butterfly or a ratio fly. So you know what? I like playing into earnings and then waiting until it's done. It's like I liked the drama when I was younger. Just now it's not worth it. So,
I hear you. That's
okay,
sometimes.
So show us your version.
Okay, yeah. So here we've got Nvidia, and I'm spending a little bit of money on this. I look at this as a hedge, but you could easily look at a play like this as alpha generating. So you have a view. For me, I have some long exposure everywhere else, and if Nvidia misses or there's something they don't like about it, of course, it's going to probably bring the market down a little. Now, I don't think it's as important as it was 5 months ago because we've had this nice broadening out in markets. in general. So I think, the market has kind of shifted, whereas for a year and a half there, it was Mag 7, it was AI, it was super, super high concentration of a few names. The 490, the S&P 493 have done okay since then. So I like that. So I think unless it's terrible, I think we can shrug it off to some extent. It's not going to be good for the semiconductor. I mean, I looked at Qualcomm started falling off a cliff today. I mean, just it's like it's dominoes, isn't it? In the semiconductor space.
Well, Qualcomm has a reason. Apple's going to make their own chips. They don't need them anymore, and they're in trouble. That's why they are justifiably rolling over because they priced in way too much of revenue based on Apple, and Apple's like, we're out. So they have next year to find a replacement. Is there a replacement?
Is there a replacement? But that's the thing. Some of these hyperscalers are going to be making their own chips. So I think even for a company like Nvidia, at some point, I mean, I don't know when that is, but at some point, you're dealing with some of Nvidia's most gigantic customers have the means to do whatever they want, and so anything can happen. Anyway, so this is your play here. So for about $2, you can play this. So typically with a typical butterfly, you'd have 140, 130, 120. Here, I'm going to break that bottom wing and bring it up to the 125. And what that does is it shifts a little bit of the risk from the downside to the upside. And what that means in English is I'm going to pay a little more for this, but I'm going to get something. To your point about what Mikey said, I hate to be right on direction and not make money. That just burns me. So one of the problems with butterflies is that can happen. It can happen with a calendar. It can happen with a butterfly. They're really capital efficient. They're very nice plays. They're Vega negative. So they work in an earnings play and in instances where volatility is very high because one of your big risks is volatility coming down. And so they work in those kinds of environments with all your Greeks, all your option Greeks. But in this case, you're going to make a bunch of money sort of around 137 and below. And then you'll make a whole bunch of money. Now, this would require Nvidia to pin at that 130-ish level here, which is, that's like a needle in a haystack kind of thing. So that's probably not going to happen. You certainly generally don't hold these things right to expiry. The nice news is here, even if it just continues to plummet down to say 115, you're going to make a little bit of money. Not as much as you would up here, but it's still going to act as a little bit of a hedge. So sometimes the tricky part is sizing these and kind of going, well, how much of a hedge do I need in my tech portfolio, for example? And so that's why having software to model these things out and kind of go, okay, well, if I've got 5 of these, what is this going to give me to the downside? Oh, I'm going to make about, let's say I can make $1,500 here reasonably. I can make more, but I'm probably going to make $1,000, $1,500 if it sort of does what I think it's going to do. Is that going to move the needle for you? So what you can do is you can just sort of up the size until it does move the needle for you. Because sometimes the tricky part with options is I get it, I get the chart and I get what it does, but how does it fit into my overall portfolio? So having some software to help you determine sizing is very important.
So you have this Nvidia, instead of, for example, playing SMH, my idea was waiting until Nvidia reports, just get out of the way, the IV crush, because that we already played this from September into the 150, right? So when we actually launched this back in September, right after September 11th, when they moved the market, Jensen came out 11 a.m. and the market was just about ready to roll over, and they just, Nvidia made literally 55% of the move that particular day was attributed to the strength in Nvidia. So long story short, after it stabilized 116, then it moved up to 120, then it was at 125, it was above that 120 wall. I said, this looks like a great time to put on a financed call spread because I see this moving up to 136. If it gets to 136, it's going to go to 148, 149. And that finance call spread went from $0 to $8. Then when right before the election, I said, it's already hit 148. It makes a lot of sense to take at least half off, right? Not still predicting Trump, but not knowing for sure if Trump. So ever since then, actually, the IV has deteriorated because of this inflation in this, in this structure. So it's actually only worth 7, right? So it was a good idea to take half off into the election, but the advantage of holding it through earnings isn't so great. Maybe a smidgen, right? But not the whole enchilada. I really like the idea of going in after earnings. So just let it play out. If it goes to 136 or 156, I don't care. I can then structure after that IV crush with a new play because I still see semis moving higher into that 272 SMH.
Yeah, that's it. And you know what? Sometimes after the earnings, you get something called a volatility echo. So they'll push it down, but there may still be a chance to kind of harvest some of that and turn that into a finance play. Again, of course, you're not getting that very, very elevated implied volatility that you get before earnings. But before earnings, you're just getting you're getting a big coin flip. You don't know what's going to happen. After earnings, you can start to make sense of the news and the numbers, and you can kind of formulate a better idea of where you think it's going to go. And then I like your idea. Absolutely. It's not too late. That is, I know people who just do that. They wait until literally the morning of earnings and that's when they start to put on their play. So we have SMH kind of sitting at this level here, 240. A little bit at stake here tonight is if we start to break down towards that, then maybe that brings in, you're going to be much better at this, Samantha, but maybe that brings in 220. Or maybe we can kind of get that channel going.
The
that little
200
line there.
day is basically what I'm expecting it to hit before it bounces. So the SMH 200 day is literally 236.55. Let's call it 236. So I have no problem with that, and I would expect that to kind of tag before a bounce. But in order to do that, we actually have to have a little bit more shake and bake in Nvidia, right? Because Nvidia is such a high concentration in SMH. It also is responsible for 60% of year-to-date gains in the NASDAQ. So it's going to be very hard for people who are playing tomorrow's 0 DTE or even weekly SPY or Q short duration options, because if Nvidia moves big or small, it will have an impact on the market, period. I think what was the expected move is 8.5 or 8% for Nvidia and 1.7% for the Qs.
Yeah, and I think last time they sort of overdid it. I think it's been about 5 or 6 reports since we really pushed. Here's a little visual of the last earnings report. So here we are today. As you said, we're kind of sitting around that 8% expected move, 8% up, 8% down. The previous earnings, as important as these ones feel, the previous earnings actually had more variability in the expectation. So quite a little bit wider range, 10% up or down. And we stayed within, right? Remember, we kind of dipped down. They didn't love it. We went from 129 down to maybe 115 or 110.
And not to interrupt you, Hans, but Nvidia did just report, and as expected, they beat 0.78 was better than expectations of 0.75, and revenue was 35.1 versus 33 billion expected. So we'll see if there's some more data that comes in. But for right now, it's having a short-term sell-off into 138. But we have still miles to go. More metrics, more analysis, more market reaction, the conference call. So this really, anyway, continue. I just wanted to.
Yeah, I mean, so far, I think they were looking for about $11 or $12 move, and we're not getting that. We're under realizing is what we call that. So we're under realizing what the market expected potentially. But as you said, it's very early. Anything could happen. I mean, they could on the call he could just start raving about things, and this thing could be 155, could be anywhere. So right now, my plays are sort of not going to really do much for me. I got the 140. So, I mean, it's not bad. If we can sort of push down towards 135, my broken fly starts to make a little bit of sense. I did pick up a 155, 170 for tomorrow for a couple bucks. So, sorry, it was a 157, half 70. So I paid $2 for a $12.50 spread. And I thought that's not too bad. That's fairly reasonable just to have a little bit of an upside kicker. So I've got that there. So I'm going to have to add that to my cost of the overall, the two structures together. So we'll see how this plays out. Sitting around 140, it's not really doing very much at all. So this will be another one within the expected range. 2, 3, and 4 reports ago, we had moved outside those expected ranges.
So, in a nutshell, options, we can't do anything with it anyway. I mean, if we were to have some ginormous beat, you can sell the stock, right, to kind of lock in if you've got directional calls. But otherwise, after hours, we're still at the whim of the market reaction for several hours, the overnight, and then the morning pre-market. So that's another reason with lack of control over adjusting those options, you're kind of just you're sitting and waiting until the market opens. So
yeah, if you've got spreads, then you're a little bit handcuffed at this point. Now, as you said, if you have an upper call, and I teach this sometimes to people who a stock will jump in the aftermarket on earnings, for example, or some sort of news that comes out, and they'll exercise some calls in order to sell the stock. And I'm telling people that's the wrong thing to do. You want to sell, you want to short the stock because you're turning that position into a synthetic put. You have full downside in case things move around. And as markets stay open longer and longer, you're going to have more opportunity to kind of play these things. I'm a little curious to see if there's any sort of noticeable change in premiums in general when we have 20-hour trading days, 21 hours. I don't know what it is they're talking about. It's closing at 3:30 in the morning or 2:30. I can't even remember what they're considering. But in a sense, that's something that's interesting from a premium perspective. It should change things in some way, because if you're a market maker and you're a long gamma trader, which means you're trading stock back and forth in order to pay for these options that you've purchased, if you have extended hours in order to do that, then in theory maybe you're able to pay the theta, as we call it, a little bit more. So that'll be kind of interesting, but we're not there yet in terms of extended trading hours. But yeah, you won't be able to trade the options, but you'll be able to trade stock against your options, which is an interesting prospect.
Yeah, but only if it does extremely well. And right now it is recovering a little bit. Again, we're going to have gyrations. It's just
it's a nothing burger.
No, right now it's fine, right? It's like it just doesn't matter. But there are many things that do matter, right? So we do have the volatility that has been elevated into today's settlement on war vibes or drums. We definitely have to see who's going to be Secretary of the Treasury. This is a really important economic role. How are they going to finance the deficits, and what's the interest rate regime look like? Because it will be they will absolutely be pressuring Powell or pushing Powell out, one or the other. So we got to find out who that is, and we don't have odds right now. It's come down to two names. Trump said he's going to interview Rowan, who is Palo Asset Management, core Wall Street, and then the other one is Kevin Warsh, former Fed head, and there's a lot of divisiveness about which way to go. And then, of course, the trade czar, which is Robert Lichtseitz. I can't pronounce his last name, but everybody knows him. He's been around for a long, long time, and he's very, very tough on China. He is going to get a position, and Lutnick got Commerce Secretary. So we definitely have some hawks. Very, very tariff-driven hawks, China hawks, whatever you want to call it. But right now, the bond market is just waiting until we get that Treasury Secretary announcement.
Yeah, I'm not that surprised, but the TLT's been pretty stable lately. We had an iron condor on to play that crush and volatility that we had from pre-election, because as we know, that move index was extremely high, rates fall was very, very high. So I figured there was a chance to make a bit of money. Should have waited a little bit longer on it, but in this game, there's a lot of shoulda, coulda, but it was a very nice trade. I think it'll be interesting to see what volatility does tomorrow. We of course had this push up into the 17s today, but it isn't all about Nvidia. So last week, same time, we were sort of thinking, well, if we can get past Nvidia, then it's more or less smooth sailing into the end of the year. We may have this kind of grind up, melt up, and the associated volatility crush that you usually get, right? And so I'm kind of thinking, you were sort of thinking something similar, that maybe we get a VIX of kind of 13-ish, 13 and a bit, you were saying. I think we could even dip below 13. Now we have this
1240.
1240?
Yep.
Oh yeah, that's I like that number.
That's after Thanksgiving. If we're going to have this December burst, in any form, I just see volatility fading VIX into that 1240.
Yeah, so we'll see what Nvidia does for tomorrow, but I think that can inform us a little bit in terms of what we do. We should see a bit of a crush in VIX tomorrow, but we'll see where we end up. I've been putting on this trade here. I put on a couple little sleeves of it. the VIX December 15, 13, 12 half. So again, broken wing butterflies are our theme for the day, I guess.
And I want you to do the in the money calls that are sold, deep in the money calls against the position, because that was something I sent you earlier. I showed you. Spot Gamma did a nice write-up on it. But I have a colleague, Stephen Harlan, who is someone who runs Next Signals, or he created his own software. And beautiful, he kind of spied that they were selling deep in the money calls. And we talked about that, right? It's a great protective measure if you're long the underlying. And I wanted you to kind of talk about that strategy, because that worked very well for your client on Tesla earnings. It definitely seemed to be a popular one for this earnings, which is why I said I would not be surprised if Nvidia is a premium seller's dream, because there was so much in the money activity calls that were sold. Anyway, that was a technique that you had talked about also on Tuesday with clients, getting into some of these kind of high profile events. Can you talk about the technique of selling in the money calls?
For sure. So I think this is kind of a cool strategy. Now, an in the money call, just so you know, is basically kind of like it's a synthetic short put. So, but in the case of the in the money call, maybe you own a stock. So I know people who own Nvidia, $30 is their cost basis. And so they're going into an event like this and they're saying, well, I'm a little bit nervous about it. I don't think it's got maybe a ton of upside short term. And for an in the money, for a deeper in the money call sale against your stock, you have to kind of concede that you're not super bullish on it, because you're going to be giving up a little bit of upside. So if I own 100 shares of Nvidia, so I'm going to get rid of my fly and my call spread, which is now going to turn to dust overnight, which makes me very sad, but that's okay.
It happens. Trading is not a game of perfect. It's a 100% injury sport. We will be hurt, but you manage the risk. You manage the loss.
I kept it small. I gave myself an extra week because I thought, okay, if we gap, we're going to gap and go. So this is going to be, I think it's sort of, my thinking was there was a big air pocket. I wasn't seeing a lot of bullish activity on the call side of things. So I thought if it got up there, it was sort of going to catch people with their pants down a little bit and they're going to have to pile in. So I may still get a little bit of value out of those. We'll see, probably not very much. So, okay, so let's say I own 100 shares of Nvidia at about $140 here, and I'm a little nervous going into a print like this. And so you can use this on another name that hasn't already had the earnings come out. So we could look at something like, let's go to like a November 29th expiry. So we're going to give ourselves about 9 days, including the weekend. And we're going to say, okay, I'm going to figure this stock could drop to about 130, maybe even to 125, 126. So what I could do is I could sell an in the money call against that long stock. It's going to effectively give me a cushion of about $22. Instead of selling, one of the issues with selling an out of the money call is if you're doing covered calls, is they're great in bull markets, but they don't really give you very much protection on the way down. So sometimes a client wants, especially if they're up a lot of money, but they don't want to sell the stock because they don't want to trigger gains in a particular holding. So this is a sort of method that can get you through a period of time, an earnings report, a seasonal type thing, whatever it might be. And it'll give you that $22 of cushion, which is basically going to be an amount of intrinsic value. So this call, the 125 with the stock at 146, has to be worth $21. So that extra dollar that you're getting for the call, if you sell this at $1, is the time value in that call. So if the stock just kind of sits around and doesn't do anything, you're going to eventually collect an extra dollar for 9 days of work, which is okay. It's better than the poke in the eye with a sharp stick, right? It's okay. It's not a massive amount of time premium. If you want a little bit more time premium, you're going to have to go, say, to the 130. And that's going to give you a couple dollars of time value. That's going to kind of melt away over time. So the nice thing about this is that it's going to give you a much better risk profile to the downside. You're going to get a nice $22 cushion before your break even. So you have to kind of think, well, okay, below 125 or, let's say below 124-ish, I don't think Nvidia is going to go much lower than that. But if it gets down into the 120s, I'm going to protect that entire move with this short call. Whereas if you were to sell an out of the money call, let's say you sold the 150 call, you're only going to get $5. So $5 is going to protect you to the tune of $5. That's all you're getting on the way down in terms of protective value, hedge value, cushion. The in the money call is going to give you a little extra. Now, all this is, and this is starting to get into the sort of nerdier part of options, is when you are long stock and you sell a call, you're basically just creating a sort of synthetic short put. So all you're doing is you're really selling a put at the 125. You're turning this position into a short put for about $1 of time value. And some of my clients, and it depends, what your requirements are from options and markets. Some clients are at the stage of their life where they're, maybe they're in their 60s, their 70s, and they're no longer looking so much for growth. They're looking to turn their portfolio. They still want exposure to stocks, but they're looking to turn their portfolio into something more that looks like an apartment building that's paying you rent. So Nvidia is a tenant, and Microsoft's a tenant, and J&J is a tenant. And each of these tenants, they'd like to get a little bit of income from. They're not greedy. They're not looking at time value from, the at the monies that are going to give you $7.55. Or $7, they're saying, you know what, I'd prefer to only get about $1 of time value, but what I really like is that I'm going to get $20, $21 of intrinsic value. That's a cushion I want, because at my age, or for, whatever circumstances I'm in, I need capital preservation to be a little bit more of a priority for me, as opposed to growth. If you want growth, just stay long Nvidia. Or if you want a little bit of growth and income, own Nvidia and sell the 160 for 230. Now you're getting a little bit of extra income. You have a nice flip of about, $14 of potential capital gain that you can make on that holding. And you're happy if the market goes up. So it's a little bit of it can be used in different circumstances. Number one, as we talked about, for a hedge on a stock that's gone up, you don't want to trigger gains, but you want to create a little bit of a hedge. And then it's something that people use. I call it my cash machine strategy, where I did one on Netflix the other day and grabbed a couple percent there. And what you can do is if you're, let's say you look at this and you go, well, I'm looking for, I don't know, about 1% of time value. Well, that's easy to figure out. 10% of Nvidia is $14. 1% is going to be $1.40, right? So you're going to go down, you're going to go, okay, well, how much extrinsic value, time value, where can I get about $1.40 premium? And then that's the one you're going to sell, right? You're going to give yourself, here's better extrinsic value. You can see on the other side here, about $1 of premium, which is basically where your extrinsic value should be on the calls. So you're getting, okay, here's where I'm getting my $1.42 of extrinsic value, of time value. So I've got to sell probably the 129 call in order for me to get that 1% of income from that time value that's going to, of course, erode down to zero as we get to that expiry. So different ways to look at this sort of strategy: hedge, income, protection, but again, giving up some of that upside, because there's no free lunch. And so when you look at the upside in a play like this, well, your upside is limited to that premium, that extrinsic value, that time value that you took in.
Excellent. I hope folks get this. It might take a few times. We'll go over it. When I think it really is kind of prominent, which you recommended for the Tesla trade, and which I thought was also kind of timely for the Nvidia trade. By the way, they did do really well. It's the consecutive growth is slowing. In other words, revenue continues to surge in Nvidia, rising 94% on an annual basis. They're still king of the road during this quarter end, October 27th. But it is a slowdown from the prior 3 quarters, when sales rose 122%, 262%, and 265% respectively.
Uh-oh.
So anyway, I think for me, the long story short is the max pain for Nvidia is 140. That's what we hit pre-market, probably where we end the day. But for Friday, the pin, I still see it as 150. So now that we get this IV crush, let me ask you this. Now that we've kind of gone through kind of like the Jake Paul, Mike Tyson fight this weekend, it was so lame. So now we've had the Nvidia thud, and the Trump bump has kind of thumped, back down to where it was. And it's still looking a little wobbly. Where do you think we go now as a way to play Nvidia into year end? Also considering that you and I are both aware that next week will be a low volume week.
Well, and I think low volume weeks there's an old saying, you don't short a sort of indifferent market, because you can get into trouble. Markets, it depends what the prevailing move is. So what I teach people is, listen, you have to realize if we're kind of in a VIX 22 market, then the prevailing underlying sentiment is going to be nervousness. In a generally positive, I expect VIX to be back in the 15s probably tomorrow. I'm not sure if we see any more saber rattling overseas or anything like that, but I think we're going to probably, this is one of those final pieces that we needed to take out of the equation in order to start potentially getting this little grind up towards that 6,000 level again. And my idea is kind of towards that, maybe that JPM call leg of that big structure that's out there. So maybe that's around 60.50. So maybe we start to do that. So I think, and if Nvidia doesn't kind of react too negatively, I think it's fine. Probably still in play. Yeah, I think you're okay to buy it. You've now taken big if off the table, which is, oh my goodness, what if Nvidia misses? It's just going to impact everything. And by the looks of it, you're taking that away. So you're taking one of those, you're taking a big rocking chair out of that room. Remember the cat in the chair in the room full of rocking chairs. It's very nervous. So you're taking those rocking chairs out of the room, and the cat's starting to feel a little better about things. He's kind of looking around at that one or two last rocking chairs, but the rocking chairs are disappearing. And so we may be back to some of those themes that we talk about, those corporate buybacks, those the CTA buying. If volatility comes down, we get those vol targeting funds start to buy again, because as volatility shrinks, that means they buy more, which makes volatility shrink, which means they buy more, which makes volatility shrink. And this is the world that we're in now, where derivatives are the dog, no longer the tail, or the flea on the dog, et cetera, et cetera.
And right now, volatility is relatively calm in the oil complex, OVX. It is still relatively calm in MOVE, the Treasury Index, and it's still relatively calm in equity VIX. So we still don't, that's important, right? As long as they're not going haywire, that's good. And yes, we've got the other Santa effect, seasonality, post-Trump bump, and we'll just kind of see who the Treasury Secretary is and hope they can de-escalate what's going on over in Russia, Ukraine. But I still feel that this is not a time to be complacent. It is very bullish. We still are, right? The big picture into the end of the year, but not if there's escalation. So what are you recommending for protection?
Yeah. So, I mean, for protection, I'm not loving VIX right here. You could pick up some downside QQQ put spreads. I think maybe that's where I'm seeing some weakness in Microsoft. I'm not loving how some of these mags are trading. So if anything, some of the leverage, I think, is maybe in some downside plays in mag. But then in the back of my mind, I'm thinking, well, if we're higher for longer, that's probably starts to play into mag a little bit as well. So I think probably some downside put spreads that you could put on in the QQQ. You could even use the SPY to have that, to express that downside hedge. I haven't started to really look carefully at those. I've been sort of playing that vol crush, the downside VIX plays. So just kind of probably start looking at that a little bit more over the next few weeks. And I'm kind of looking at almost like, the thing that you have to be careful of is you have to kind of remember that as you keep adding short puts here and long calls there and short vol plays here and there, it's all kind of similar, right? Long stocks is short volatility. You're basically a lot of trades are a little bit correlated, right? So when all things go to hell, correlation goes to 1. And so that's sort of that old saying that means, well, a lot of things start to act the same way. So one thing I see traders do is they kind of, they like this trade, they like that trade. Before they know it, they've got 17 trades that really are starting to do the same thing. So I think I want to see a little bit of stability before I start to add some risk. I want to see some evidence that there could be this just melt up. It doesn't have to be an extreme melt up. It can be sort of a slow and steady one, which I think is okay, because then I wouldn't mind putting on something like an upside condor, even like a directional iron condor, upside, even like a big butterfly that's going to kind of envelop that 6,000 level and just kind of cradle it. And just, you get up there and in the absence of anything big going on in the world, that should start to perform for you. So I'm focused a little bit more there.
Unless it turns into an MSTR.
Well, I think somebody showed me today that MSTR option volumes surpassed all other stocks today. So it's it's going bananas. That's pretty good for a $500 stock.
Well, I actually equate it very much to GameStop, the 2021 parabola. And this is dangerous because as it starts to suck in all the liquidity, obviously it becomes more of an air pocket elsewhere, but it also creates a situation where they're going to be bidless at some point. The options market will even break. Like, for example, the puts were gaining today. Not just the calls, as MSTR was freaking out. I don't even know where it ended up. It was 12%. And then boom, it just had a big, huge advance in the puts as well. So there's some instability that's happening. And it reminded me very much of GameStop because that was a very active one for me back in summer of 2020 into 2021. GameStop was my $4 to $40 and it went haywire. So it was crazy. And when I hit 240 is when I actually said, get out. Just don't do it. Nice. And it's going to break. Like, it's going to break. You won't be able to leave. And it did actually end up going to 340 and then break. And then they stopped the options market and a whole bunch of folks were angry and the apes went wild. And anyway, the point is MSTR has a very similar feel to me.
Went wild, yes. Those animal spirits, well, I think you're right. I think that's what's going on. It's, what is it, worth 3 or 4 times the value of its Bitcoin now? Michael Saylor is
the NAV differential. Yeah.
Yeah. So, and I mean, Saylor's coming out and he's talking about all these convertibles. Now he's creating all this value and everything. I mean, that guy can spin like I haven't seen in a long, long time. But
Madoff is like, look at me now.
Yeah. But he's a genius, right? Because he can do it, and he's
Be careful who you worship, though. That's my only,
Yeah. Well, and look, today, and I agree, the liquidity was terrible. I was trying to put on a downside. So the trade that I was looking at today, which I think, you could probably do tomorrow as well. I mean, it's trading up again, 481. So you might even get it on for a better price. I put on 435. This is for November 29th. So I want a little, that's only 9 days from now. But what you want with these flies is you don't want them to be out too far. Sometimes I see people positioning in like a January fly or even longer. You're going to get very little kind of gamma, we call it. It's going to make a little bit of money, but you're going to be surprised at how little it makes because you really only start to make the bulk of your money in those kinds of structures near expiry. That's where the 10 structure that everybody looks at and goes, wow, that looks really pretty. I'm going to make all this money. You don't until the very, very end. So you need to they're not expensive to put on, which is the nice part. They're very capital efficient, but you kind of need to have them react more quickly for you to give you that bang for your buck. And in order for that to happen, they've got to be a little bit shorter term. So I'm looking at a November 29th play. I picked some up. I think I ended up getting filled for around 975. Now it was tough because the spreads are insane. Like you were saying, the market makers are kind of not panicking, but they will. But remember, a market maker is going to fleece you if he can, right? I was a market maker. Or
they can go out of business like Robinhood almost did.
Yeah.
So that's my point. Is like there's way too much danger in this particular issue. Bitcoin itself, I still have 130, 135 price target on it, but MSTR is just a toxic instrument. Be very careful. That's all.
It's special, right? But we know that we know that logic can be tossed out, but that's what's happening, right? There's massive short covering. There's panic in the streets, and
I will play Mara, but I will not this MSTR. We were early on this, right? This was like October. Bitcoin's moving. You were in coin. MSTR is the obvious one. It leads, and then Mara is the one that lags, but it's still the best miner. These all have their own little personality and price behavior. But MSTR right now is gonna break things. So I would personally caution stay away. This is my feeling because I actually lived that with GameStop, and lived that. So
and I think you can play it if it's an appropriate type thing for you to play. This is not an investment, but I think playing downside at this point actually gets a little bit interesting, but you do not short something like this with, you don't physically.
Unless you want to make money on your puts.
Well, unless what? Sorry?
Unless you want to make money on your puts. The puts went up too. Just kidding. Okay, so.
Yeah, they do. I know it's like spot up, ball up is what we call, like everything's gone bananas.
Exactly. All right, before I forget, because I did forget, if you have any questions, folks that are here in our power hour for options, and you've got a trade or something you want to learn or talk about macro to micro and how it affects, then hit us up. I think we're pretty, we wing it in some regards, but we have very clear ideas of what we're looking for in the market as far as the behavior of direction. I look for sector rotation a lot, what's healthy, what's not. And then, of course, individual trades. I love how you go after, Hans, like SMCI had its, we're going to meet compliance or whatever, the NASDAQ delisting, and it popped up and you were chasing it. It was up like 50%. And now they're not so sure it's going to meet, and it's, so you definitely like to run with the stuff that is hot. And I respect that. And you do it all with options, right? This is cool. I'm looking more for market direction, the sector rotation, and then boring but profitable for the most part, unless I have a really strong thesis. Like I still have a very strong thesis that semis are not done going up. They haven't rotated. We got the IGV, right? That took off. And then when we had the show last Wednesday, I said, I think IGV's done. I think now it's going to kind of come down a little bit. Doesn't mean that the individual plays within that we've talked about week after week. I keep adding one, right? So last week it was Mobileye, and this week it's Datadog. The week before that it was Square. Before that it was Twilio. And before that it was Docu. So every week I hit one, which is in that kind of SaaS reacceleration space and or the IGV space. But I think IGV comes down now. I think the airlines are at risk of really kind of rolling over now. And MSTR is just a parabola. And a parabola is, make no mistake about this, they're trapped longs. They don't dare buy, they don't dare sell. They're waiting for some volatility to trigger, and then they're going to get out. They think they're going to get out, but the door is very, very, very narrow the higher it goes. So that's all. I'm not a parabola trader.
No, and I think that's, I've done this for so long that I get involved because I like to have a bit of fun, but really a lot of my strategies are kind of steady stocks, not boring stocks, Netflix. I love dominant
Netflix
companies.
is gorgeous. Oh.
Netflix is gorgeous. I love companies like that just own their space, that are just cash cows. Those are the ones that really get me excited. Sometimes, I'll veer out into something fun just because, it's always fun to do. And the crypto space is really big now. So, it's fun to be a part of that. But you definitely want to be, it's like, I'm not saying it's like the weed space, but you remember marijuana was really, really hot. And then it died a horrible, horrible death. And it's the worst thing when you get stuck in a name like that just goes down.
That happens. That's the cycle we all play. It's always buy the rumor, sell the news. That what in January of 2021, it wasn't just GameStop. It was a ton of memes. It was China, the K-Web contingencies. BABA is still on the ground. It's way oversold. But the point is, it was SPACs. So it was all the speculative excess that came in from the money printing and the quantitative easing and the stimulus, oh my, to the tune of $9 trillion. And where does it go? It goes quickly into the market to make lots of money. We have that still. So money's just, the excess is kind of rolling in and finding a new surrogate, a new proxy, and it's clearly MSTR. Anyway, the point is you got to take some care in what you play and know what you own, I guess. So if you're playing the parabola, fine. It's very it's exciting. It's adrenaline, but at the same time, you can also get both hands chopped off and know what you're doing. There is a question by Georgia saying, "Will you elaborate or how to sell in the money calls on long stock, for example, TLT?"
Okay. On TLT. Now, one thing you have to be aware of, folks, is that if you are selling in the money calls, you have to be very aware of when those ex-dividend dates are, and because you don't want to have that stock called away. Yeah, if that's your primary concern is having the stock called away, and that's why you're doing an in-the-money call, then you want to be aware of when those calls could be exercised. And they could, there's a mathematical calculation that goes through it, but basically you need to decide the day before the ex-dividend date. So if you're doing this kind of thing, make sure you have your calendar and make sure you have your alert set up for, okay, I've got an in-the-money call on whatever stock it is that has a dividend. It's ex-dividend on November 22nd. Well, I better take a good look on November 21st. and make sure that I don't need to close that position, roll it, or whatnot. So, but basically on TLT, well, I mean, you would just do the same thing. There isn't a lot of juice in TLT. Now you'd want to go, it is rates.
So she has it at 96 and we're kind of hovering around 90 right now. So long term, what would you do into an event that might be, that you got to think wars, bonds are going to spike up, even if it's temporary, etc. So,
and this is the risk, right? Is that you get that. I did an at the money sale on Hood and Trump won and the thing just went for a big run. So I've given up some upside there. Still a profitable trade, but I've given up some upside. So on the one hand, you're getting higher premiums, which is enticing you to do something in the covered call space because you're getting those nice premiums, those nice yields. On the other hand, if something happens, are we going to get a TLT 93, 94 before we know it, just as people sort of run to safety? I don't know. We haven't really seen much of a reaction out of it. It doesn't seem to be very reactive. Gold's kind of jumped up a little bit, right? It got down to 237. So it's coming back as the US dollar comes down as well, though. So
gold is kind of on its own little trajectory. I'm actually still bearish gold since pre-election. I said protect for 2 weeks, please, 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 because there were so many clients that were just, I called it balls to the walls because they were. And thank God they did protect because it came down. It actually took 3 weeks, had a little bounce recently because of war drums. I think it's actually going to continue lower. So TLT, I don't think it's found its bottom yet. I have another level I'm waiting for it to tag base and then move higher. But I think she's asking, what would you sell in the money for TLT as an example?
Yeah, you could do something like, if you're worried about the downside there, you could sell something like a DECE 88 half call. You're going to get, December, going to get about 270 for that. And that's going to be, what is that? About 270, 90, 20. So you're going to get about 80 cents. You're going to get about 80 cents in time value for that. So that's something that's going to give you protection down to the 88.5 level, to the tune of, well, it's actually going to give you a little extra. It's going to give you protection down to 88.5, less the 80 cents of extra time value that you got. So really, you're protected down to about 87, whatever that is. You've got a little bit of an extra cushion there in case this
I like that because
down.
I see 88.5 as a strong support level for TLT.
So that's a nice one there. So you don't want to get out. You want to kind of hold on. Yeah, I see this low that we hit in April, sort of down around that level. So that's not
also what I call the Keltner channel. It's kind of like the palm of your hand when it comes to the Keltner channel on a big time frame. It usually has a solid support level. So anyway, 88.5 would be my level. Now, if 88.5 breaks, by the way, that's no bueno. We have issues. So we're gonna address that when the time comes. But for right now, let's go with 88.5.
It's funny, I remember on TD Ameritrade on their show, I recommended TLT with covered calls at $100.
Perfect.
Years ago, and 90 bucks.
I thought it was recently. Recently, you did it again.
Yeah, it's
all right.
Yeah, that's right. We got over 100 again. That's, what, I actually owned it and I got out at 101.25. It was like the most inspired sell that I've had lately.
And then it formed a bearish engulfing and rolled over firmly. But that also was the Fed 50 basis point rate cut September 18th. And literally that morning I said time for a yield spike. So we were both in that. What about Amazon or SPXW? Those are some chat requests, if you could.
So Amazon, you kind of helped me.
You're in Amazon.
Yeah, I am in Amazon. I was out, so I've been playing this one over and over again with these financed upside plays. So we had 3 good ones. The last one I got out of around 210. I think it ran almost up to 215. And I was starting to think, boy, I don't want to be not involved in Amazon because I love the results. I love the company. I think they're doing all the right things. So, and then I talked about it with you and you said, what, Amazon always pulls back. And I said,
always comes back to 200. You can buy it cheap there.
It always does. Amazon goes for these runs and it always gives back about $10 to $15 off that high and then gives you a chance to reload. It's sort of this reluctant bullish stock. It just doesn't want to go. And then suddenly it does. And then it starts to be reluctant.
No, it had again. Mackenzie Bezos selling like a whole mess of stuff right there. And then before that, it was Jeff with his 200 call wall, right? So every time it got there, his order got filled. No, literally, they've been selling like mad.
But that's a gift for us, yeah. So we came down to around 202, I think. And then so I sold some 192 halves, I think, puts in order to finance a little upside again. And so it's the idea that, look, I'm okay owning it in the low 190s again. Does that mean it can't go to 170? Sure, it can. It can do anything. But I feel like this is a name to the point that we were making earlier. Just make sure that when you're trading these things, if you have to, when you're trading something crummy like an MSTR, sorry, anybody out there who sort of, maybe that's not the right word I use because there's some big fans out there, but look, it's insane. You got to put your trader hat on, right? So you're gonna be trading options a little bit differently. You got to be cutthroat. You got to cut your losses. You got to let your winners run a little. That thing's moving around like crazy. Let yourself make some money when it's going in the right direction. But do not get stock holding. I remember Square was 260 back in 2021, and it got down to $50. So don't get stuck holding a 400 PE stock or a weed stock that's going to go down and never ever come back. If I get stuck holding Amazon or Apple, I'm not going to lose any sleep. That doesn't mean it can't go down, but that's your investor's hat on. You're trading options as an investor, put your investor hat on. You're trading some sort of more speculative stuff, put your trader hat on and understand what day what instrument
you do both for Uber.
Right.
I got you.
You got me. You got me. I love Uber, and they're hitting it now. Elon made me a bunch of money in other things, so I'm going to forgive him. But he's set me back a little on my Uber. I'm still way up over my cost basis, and I still love the company. Sure, I don't know. I think they're still going to be. I think they're still going to be very involved on the robotaxi side because I love owning leaders. I don't think anyone else is close. Lyft, I don't know who Lyft is. Uber is really taking over that space. They've taken it over. They're the winner. They're like a Netflix. And to me, that's a comfortable position to hold. I hope, there were little crack in the armor there on the last earnings in their mobile space, in their mobile business. But
on the ever use covered calls straight? That's also a question we're getting. I'm assuming with Uber, since it's, one of your, it's always the ones you love that hurt you the most, I think is what you sent me. So how do you play that? And do you use covered calls?
I do.
I covered calls. Boring,
yeah.
Out of the money.
Boring, out of the money. I did some around 81, but I haven't done any since. So I'm watching it now. It sort of popped its head above 70 today, and I was thinking, maybe I'll bang out some 73s, 74s for December. So I may do that. It's kind of in a nice down channel, and so what I do is I start to look at it, and even for me, loving Uber, I kind of look at it and I go, look, I have to admit this is acting bearishly. So I might look for a little move back to a 9 EMA. You like the 10 a little bit, Samantha. Whatever. It doesn't matter which one, but you use some of those shorter term moving averages as little spots to maybe sell out some calls and look for a little bit of help from the market. And so, but if it starts to break above that downtrend, I think I can start feeling a little better about it. And I might even use a repair strategy, which is the one we used on Tesla for that client a few weeks ago.
Yes.
And so I might sort of say, okay, I'm going to buy some 70s and sell some 72s, twice as many 72s. And that's going to effectively give me a call away price of about 74, depending on the pricing I come up with there. So sometimes we use that repair strategy to make up for a stock that's maybe dropped a little bit lower than we wanted it to. So
and just a comment by Not Musk. I love this. Dash is eating Uber's breakfast, probably lunch and dinner right now. Institutions seem to like Dash. I look at this a little bit differently. I look at Dash as it was a prior IPO that came in 2021, and a lot of stuff, this year it has been kind of coming up out of these lovely bottom fishing plays. And Dash was actually one that our very, very, very first show, I said, what about Dash? It looks really good on a weekly. And so we were actually looking at Dash and Docu, and they looked like they were just ready to kind of get moving, and they did. But I think of these sometimes as source of funds. Money moves. And so when it goes into Dash, it leaves Uber. When it goes into Uber, it leaves Dash. So sometimes you just have this kind of rotation. But yeah, Dash has definitely been surprisingly strong.
Yeah, beautiful stock. Yeah, we had that big move there.
And I think that's it. I don't want to go into too many, but you definitely shared the in the money call tactic for when you kind of have the underlying as a way to protect on the downside. Kevin is talking about Amazon bull put spread. That's a calendar. That's near duration. We just talked about Amazon. Yeah, we already went through Nvidia. We were all eyes on that. And where it's trading right now is basically exactly where it closed. So my premonition. It was that a lot of in-the-money calls were sold as protection. It would not have a wild move. And then basically premium sellers would win. That 8.5, percent, 8.5% move is just, it was too much. It's too much drama. Anyway, it would not surprise me if it's somewhere between that 140 max pain and 150 pin. So the largest kind of amount of strikes are right there at that 150. And sure enough, it's exactly 145 right now. Hysterical. All right. So we're going to, any other final comments before we close? We are going to take a break next Wednesday because it's Thanksgiving here in the US and I got family coming. So I'm not going to be doing any webinars. I'm going to be closing my trading room and writing up a client post of thanks, and then I'm going to go make some pies and host. So I'm going to wish everyone a great rest of the trading week. Let's see what happens, obviously, into the reaction of Nvidia and Snow and Palo Alto and all these great trade setups. But we will be back in 2 weeks, so the week after Thanksgiving. And thank you very much for joining us. Hans, anything last to say? Oh, yes, of course. If you are looking for not only a service with 10 expert traders and analysts, then you've got LaDucTrading.com. If you're looking for a course on options, beginner, intermediate, or advanced, go to LaDucTrading.com/Hans. Hans has a program that he authors. Again, you've got some fabulous educational materials. My clients also have used it to ramp up their, transition from stocks to options to more portfolio protection. And they've raved about, I hate to say canned courses, but man, we can do this custom stuff all the time. But eventually you really just got to sit down and do the homework, right? And then try this stuff. And then your material is excellent. So hopefully that will be something you can do over the holiday break, because we're going to have thin trading next week, light volumes, stuff can move around crazy, but then we should get into December and year end. Knock on wood. What'd you call it? Eggnog and
Eggnog,
and merriment.
maybe eggnog and merriment, and a little spiking the eggnog too, perhaps.
All right. Cheers, everyone. Thank you so much for joining.
Cheers, everyone. Bye-bye.
Bye.
Subscribe to LaDuc Trading YouTube channel for more macro to micro options power hour and other content.